Hello friends, welcome back to JK Shah classes, Veranda Enterprise. Today we will be revising the chapter Assessment of Electoral Trust, section 13b. We just finished Electoral Trust. We just finished Assessment of Political Parties in section 13a. Now we will be doing Electoral Trust. What is Electoral Trust and where is it required to be registered? So if you recollect, while discussing previous chapter on political parties, we discussed political parties have to be registered with Election Commission under section 29A of Representation of People Act. This is authority or this body is in connection with that only. This entity, Electoral Trust, is in connection with politics or political donations. This is to be registered with CBDT, Central Board of Direct Taxes, that is the registering authority. According to section 13b, particular income of electoral trust will be exempt, totally exempt, if some conditions are satisfied. There are only two conditions given in section 13b. Both of them are satisfied, income will be exempt. First of all, what is electoral trust? Electoral trust is nothing but as defined in section 2 clause 22 AAA of the Income Tax Act. A very nonsense definition is given. From definition you will never come to know what is it. So electoral trust is basically a mediator kind of a person between the donor, those who want to donate, and the political party. Whatever donations are received by electoral trust, according to section 13b, electoral trust is supposed to pass it on to political parties. This entity works in the form of mediator between political party and the donors. According to 13b, any voluntary contributions received by electoral trust will be exempt if two conditions are satisfied. What will be exempt will be only one income, that is voluntary contribution. Once question came in the exam that what incomes will be exempt. Answer: only one income will be exempt, voluntary contribution. In fact, it's a stupid question by institute. Reason being very simple, that electoral trust is not supposed to undertake any other activity. They cannot even have any other income. So voluntary contribution is only income, and that income will be totally exempt if two conditions are satisfied. First condition, 95% or more of the total voluntary contributions received during the year. Aggregate voluntary contribution or donation of the current year plus surplus brought forward. Surplus will be 100%. Current year donation into 95%, but surplus brought forward from earlier year will be 100%. Is distributed by electoral trust to political party or political parties registered under section 29A of ROPA. And plus, second condition, it functions in accordance with rules made in this regard by central government. Let's try to analyze the first condition, electoral trust. So what happens is, electoral trust works as an intermediary between political party and donors. Donors want to contribute. Total donation received for the year is 100 crore for example, and plus there is a surplus brought forward from last year 7 crore. Then in such situation, how much electoral trust is required to pass it on to political party or parties registered with ROPA? So answer: 95% of current year donation, which will be 95 crore, and plus 7 crore, 100% of 7 crore, totally 102 crore is required to be passed on. If 102 crore is distributed to political parties, then this 100 crore will be exempt. Exemption will be with regards to current year's income. Current year income by way of voluntary contribution is 100 crore. Entire 100 crore will be exempt if 102 crore is distributed. Right? Just keep it in your mind. That's the first condition. Second, it functions in accordance with rules made thereunder by government. Anybody donating to political party or anybody donating to electoral trust will be getting 100% deduction of amount donated. If the assessee, the donor is corporate donor, Indian company, then under section 80 GGB, and if it is a non-corporate donor like individual HUF, AOP, BOI, person like you and me, then under 80 GGC. This deduction is allowed irrespective of whether donor donates to political party or he donates to electoral trust. Position will be same because donating to electoral trust ultimately goes to political party only. However, no deduction if donation is in cash, then no deduction will be allowed under either of these two sections. You just have to remember two conditions. That's it. Questions have come twice or thrice, every time descriptive question, that too a theory question where you have to reproduce both these conditions. Once question came that Which income will be exempt? Answer this income, only voluntary contribution. Once question came on 2 conditions which you will have to memorize. That's it. With that, revision of electoral trust comes to an end. See you in the next video with some other chapter. Till then, thank you very much and wish you all a very good luck.